Great, let's now get down to the business end of things. We're going to look at the year-end closing entries and transfers. I'm just going to do a quick overview to give you a big picture, but some of this you'll remember from doing sole proprietors in FAC1601. Some of it's new. So in terms of what have we done already, we've done all the transactions on the capital account, on the current account with all the interest on the capital account, interest on drawings, interest on current accounts, salaries for the partners, etc. Then we also did the drawings account, right, where we keep track of all the monies that the partners have taken out. What do we do with all of that? All of that at the end lands up in a bunch of year-end closing accounts. Now these year-end closing accounts are all going to zero out. They aren't going to be sitting with a value at year-end. We use them to calculate certain things and transfer and close out to the financial statements. So let's start off. We're going to first look at the trading account. And the trading account is going to have basically your revenue or sales and your cost of sales. All will go into the trading account. You'll close out the sales account, close out your purchases, cost of sales. Remember, for cost of sales, it will depend on whether you are on the perpetual or periodic inventory system on the exact account names, but the principles will be the same. At the end of all of this, you will land up with a figure that will give you a gross profit balance. So you'll work out your general ledger and you'll have a nice balancing figure, okay? And that balancing figure will then come out and go into the profit or loss account. Now, your profit or loss account, let me get a highlighter up again. Your profit or loss account, you will take all your other income and all your other expenses, your selling, admin, distribution expenses, and you're going to put those all together, okay, into the profit or loss account. So you'll clear each of those individual accounts out. Okay, close them out, because remember, all income and expenses are for a period. At the end of the period, we start from scratch next year. But what we do need to do is we need to accumulate everything into equity, and that's the process of closing out. So on top of the gross profit, we will add in the other income, subtract the other expenses, and we will land up with net profit. Remember, there's no tax here. It's a partnership, right? So no taxes are going to be included. Then from there, we are going to move on to this new account that we are calling the Appropriation Account. Now, in that Appropriation Account, we are going to see how much of these profits that we are flowing through are actually available for distribution to partners. So we're going to do things like we're going to close out all those appropriation accounts, the salaries partners account, the interest on current accounts, everything that went through the current account journals that we did earlier. And you'll see in brackets I had these little appropriation in the brackets, okay? Because salaries to partners, for instance, did not go into profit or loss, okay? It goes straight to the appropriation account. We're also going to do transfers to other reserves, such as the asset replacement reserve, okay? So there we will work out the profits that are available for distribution, and the last thing we're going to do then is take those profits and we are going to split them up amongst the partners, okay? And we'll do that in the current accounts. All of this you will see in the statement of changes in equity. And what you'll notice is the appropriation account does show up in the statement of changes, but always with a nil balance. Okay? It's just used to split up the partners' profits. Okay, and sometimes to put some money in another reserve account. Gives you a big picture. Next up, I need you to work through the next couple of videos. We're going to do one by one by one. Okay, I'm going to do the journals and then post the journals to the general ledger. You will see in the exam, you do not need to genuinely do the journals, right? But the journals teach you how to think. As you get better, you will stop doing the journals and maybe just do the general ledger. Or if you get really good, you might go straight to the statements of changes in equity. It's a lot quicker, and time is a factor in this exam. Thank you.